The company reported a net loss of $1.1 billion, primarily due to the impact of the COVID-19 pandemic and the ongoing Russia-Ukraine conflict. Q1 2025 financial results. Walgreens Boots Alliance Incorporated, Nasdaq, WBA, has released its financial results for the first quarter of fiscal 2025, which ended November 30, 2024. The company's revenue growth was driven by a 7.5% increase in sales of its core products, which accounted for 70% of total revenue. The company's operating loss was primarily due to increased costs associated with the production of its core products, including higher raw material costs and increased labor costs. The first quarter earnings report, a mixed bag. The first quarter earnings report for a leading technology company has been released, and the results are a mixed bag. On one hand, the company has made significant progress in its core business, but on the other hand, it has faced challenges in its growth strategy. Key financial metrics: net loss, $265 million, compared to $67 million in the year-ago quarter. Adjusted net earnings, $440 million, down 0% from the same period last year. Free cash flow, negative $424 million. The company's net loss has increased significantly compared to the same period last year, primarily due to higher research and development expenses. The adjusted net earnings have also decreased, mainly due to increased costs associated with the company's growth strategy. Challenges in growth strategy. The company's growth strategy has been a major focus area for the past few years. However, the results of the first quarter earnings report suggest that this strategy is not yielding the desired results. The company has invested heavily in new technologies and initiatives, but these investments have not yet generated significant revenue. Examples of new technologies and initiatives: plus development of a new artificial intelligence platform, plus launch of a new cloud computing service, plus investment in emerging technologies such as blockchain and quantum computing. These investments have been made with the goal of driving growth and increasing revenue. However, the results of the first quarter earnings report suggest that these efforts have not yet paid off. Progress in core business. Despite the challenges in the growth strategy, the company has made significant progress in its core business. Retail pharmacies are booming, driven by growing demand for healthcare services and expanding market presence. The rise of the U.S. retail pharmacy segment. The U.S. retail pharmacy segment has experienced significant growth in recent years, driven by increasing demand for healthcare services and the expansion of the retail pharmacy market. This growth has been fueled by the expansion of the retail pharmacy market, which has seen a significant increase in the number of pharmacies and pharmacy locations. Key statistics: the U.S. retail pharmacy segment had first quarter sales of $9 billion. Pharmacy sales increased 4%. Comparable pharmacy sales increased 7%. ##### drivers of growth * drivers of growth. The growth of the U.S. Q1 2023 earnings report. A look at the numbers. The Q1 2023 earnings report has been released, and the numbers are in. As we dive into the details, it's clear that the company is navigating a challenging market landscape. In this article, we'll break down the key takeaways from the report, focusing on the international segment's performance. International segment performance. The international segment, which accounts for a significant portion of the company's revenue, saw sales of $6.4 billion in the first quarter. This represents a 6.5% increase on a constant currency basis. However, it's worth noting that this growth was largely driven by the company's efforts to expand its presence in emerging markets. Key highlights from the international segment: plus sales increased 6.5% on a constant currency basis, plus retail sales decreased 6.2%, plus comparable retail sales decreased 4.6%. Challenges in the international segment. Despite the overall increase in sales, the international segment faced several challenges in Q1 2023. The rise of Boots UK. Boots UK, a leading pharmacy chain in the UK, has experienced significant growth in its sales, driven by a combination of factors. The company's strong Black Friday performance played a substantial role in this growth, with sales increasing by 30%. This growth can be attributed to the increasing popularity of online shopping and the convenience it offers. Key drivers of growth: strong Black Friday performance, increasing popularity of online shopping, convenience of online shopping, growing demand for pharmacy services. The impact on comparable pharmacy sales: Boots UK's comparable pharmacy sales increased by 10.9% compared to the year-ago quarter. This growth can be attributed to the increasing demand for pharmacy services, including vaccinations, health checks, and medication management. The company's efforts to expand its services and improve customer experience have also contributed to this growth. Key factors contributing to growth: expanding services, improving customer experience, increasing demand for pharmacy services, growing popularity of vaccinations and health checks. The importance of online presence: Boots UK's strong online presence has played a significant role in its growth. The company's e-commerce platform offers a wide range of products, including pharmacy services, making it easy for customers to shop online. Strong growth in primary care services drives U.S. segment performance. Highlights: the U.S. healthcare segment reported a significant increase in sales, driven by strong growth in VillageMD, CareCentrix, and Shields. Here are the key highlights. VillageMD sales increased by 9%, driven by the expansion of its primary care services. CareCentrix sales grew by 16%, driven by the increasing demand for its population health management solutions. Shields sales surged by 30%, driven by the growth of its medical billing and insurance services. Key drivers of growth * Key drivers of growth: several factors contributed to the growth of the U.S. The call will be conducted by WBA's management team, led by CEO John Smith, and will be open to all investors and analysts. WBA's first quarter results conference call: pre-call details. Date: January 10, 2025. Time: 8:30 a.m. Eastern Time. Call type: conference call. Call leader: WBA's management team, led by CEO John Smith. Key takeaways: the conference call will provide an opportunity for investors and analysts to discuss the company's first quarter results in real time. The call will be open to all interested parties, allowing for a diverse range of perspectives and questions. The management team will be available to address any concerns or provide additional information as needed. The company uses free cash flow as its principal measure of liquidity. The company uses constant currency as its principal measure of revenue growth. Adjusted operating income loss: understanding the concept adjusted operating income loss is a non-GAAP financial measure that represents the operating income loss of a company, adjusted for certain items that are not considered representative of the company's core business operations. This measure is used to provide a more accurate picture of a company's financial performance, as it excludes items that are not directly related to the company's core business. Key components: operating income loss, adjustments for non-core items, e.g. restructuring charges, acquisition-related expenses, exclusion of non-operating items, e.g. interest, taxes. Example: suppose a company has an operating income of $100 million, but also has $20 million in restructuring charges and $10 million in acquisition-related expenses. The adjusted operating income would be $70 million, $100 million to $20 million, $10 million. Importance: adjusted operating income loss is an important measure for investors and analysts, as it provides a more accurate picture of a company's financial performance. All statements contained in this release that are not historical facts are forward-looking statements. The future of healthcare: a look at the opioid crisis and the role of pharmaceutical companies. The opioid crisis has been a pressing issue in the healthcare industry for years, with devastating consequences on individuals, families, and communities. See Item 7.01, Financial Condition and Results of Operations, of our Form 10-K for more information. The future of renewable energy: a bright horizon. The world is on the cusp of a revolution in the way we generate and consume energy. Renewable energy sources, such as solar and wind power, are becoming increasingly cost-competitive with fossil fuels, making them a more attractive option for individuals, businesses, and governments. All forward-looking statements are made as of the date of this release and are subject to risks and uncertainties that could cause actual results to differ materially from those described in the forward-looking statements. Introduction. Walgreens Boots Alliance, WBA, is a multinational pharmacy-led healthcare company that operates a chain of retail pharmacies, health clinics, and online platforms. With a presence in 11 countries, WBA is one of the largest pharmacy chains in the world. The company's history dates back to 1901, when it was founded by Charles R. Walgreen in Chicago, Illinois. Over the years, WBA has grown through strategic acquisitions and partnerships, expanding its reach and services. Business model. WBA's business model is built around providing healthcare services and products to its customers. The company operates a network of retail pharmacies, offering a wide range of products, including prescription medications, health and wellness products, and cosmetics. The company has a strong focus on innovation, customer satisfaction, and community engagement. The WBA story. WBA's journey began in 1963 when it was founded as a single pharmacy in the United States. Over the years, the company has grown and evolved through strategic acquisitions and partnerships. Introduction. The Walgreens Boots Alliance, WBA, has recently released its press release, providing a glimpse into the company's financial performance. As a leading global pharmacy, healthcare, and beauty retailer, WBA has been working tirelessly to adapt to the ever-changing retail landscape. In this article, we will delve into the non-GAAP financial measures presented in the press release, exploring what they reveal about the company's financial health and future prospects. What are non-GAAP financial measures? Non-GAAP financial measures are financial metrics that deviate from generally accepted accounting principles, GAAP. These measures are often used by companies to provide a more comprehensive view of their financial performance, as they can help to exclude certain expenses or revenues that may not be directly related to the company's core operations. Providing a more comprehensive view of financial performance and position. The company's management believes that these supplemental non-GAAP financial measures provide a more comprehensive view of the company's financial performance and position. Introduction. The company's management has introduced supplemental non-GAAP financial measures to provide a more comprehensive view of the company's financial performance and position. These measures are presented to give a clearer picture of the company's financial results, both including and excluding adjusted items or the effects of foreign currency translation. What are supplemental non-GAAP financial measures? Definition and purpose. Supplemental non-GAAP financial measures are financial statements that are presented in addition to the company's traditional GAAP, generally accepted accounting principles, financial statements. The company's guidance is based on historical trends and the current business environment. While the company's financial statements have been audited, the non-GAAP estimates used to calculate the forward-looking guidance are not audited. The company's financial performance may vary significantly from historical trends or the current business environment, and the guidance should not be relied upon as a substitute for careful consideration of the company's future prospects and potential risks. Lack of reconciliation for non-GAAP estimates. The company's policy of not providing a reconciliation for non-GAAP estimates to the most directly comparable GAAP financial measures on a forward-looking basis is a deliberate decision. This choice is rooted in the inherent difficulties associated with forecasting and estimating non-GAAP items. These items, such as one-time charges or other non-recurring expenses, are often unpredictable and can vary significantly from period to period. For instance, the company may incur non-recurring charges related to restructuring or other special items. These charges can be difficult to estimate with certainty, as their timing and amount are often uncertain. Without a clear understanding of the timing and amount of these charges, it is challenging to provide a reliable reconciliation of non-GAAP estimates to GAAP financial measures. Unavailability of information. The company's inability to provide a reconciliation for non-GAAP estimates is also due to the unavailability of information. Constant currency financial information. The company uses constant currency financial information to provide a more accurate picture of its performance. This approach helps to mitigate the impact of foreign currency fluctuations on the company's financial results. The constant currency financial information is presented in the same currency as the comparable period in the prior year. This approach allows the company to present its financial results in a more comparable manner, even though the exchange rates may have changed. By using constant currency financial information, the company can better demonstrate its performance and growth over time. For example, let's consider a company that operates in the United States and also has significant operations in Europe. Evaluating the performance of CVS Health's international segment through key metrics and constant currency basis. These metrics are used to measure the performance of the company's retail pharmacy business and to evaluate the impact of foreign exchange fluctuations on the company's financial results. Understanding the international segment. The international segment is a critical component of CVS Health's business, accounting for a significant portion of the company's revenue. To provide a comprehensive understanding of this segment, it's essential to delve into the key performance indicators, KPIs, used to measure its success. Key performance indicators: comparable sales, in constant currency, comparable pharmacy sales, in constant currency, comparable 30-day equivalent prescriptions. These metrics are crucial in evaluating the performance of CVS Health's retail pharmacy business and assessing the impact of foreign exchange fluctuations on the company's financial results. The importance of constant currency basis. The international segment's financial results are presented on a constant currency basis, which is a non-GAAP financial measure. This means that the company's revenue and expenses are expressed in the same currency, eliminating the impact of foreign exchange fluctuations. High-quality cannabis products for medical and recreational markets. The company has been in operation since 2013, and its primary focus is on creating high-quality cannabis products for the medical and recreational markets. Overview of 1933 Industries Incorporated ####. Company history. 1933 Industries Incorporated was founded in 2013 by a group of experienced cannabis industry professionals. The company's name is derived from the year the company was established, and it reflects the company's commitment to creating high-quality products that meet the evolving needs of the cannabis market. Mission statement. The company's mission is to become a leading cannabis company in the United States, with a focus on creating innovative products that meet the needs of both medical and recreational consumers. The company's vision is to be a trusted and respected brand in the cannabis industry, known for its commitment to quality, customer service, and sustainability. Product line: cannabis products, flowers and pre-rolls. 1933 Industries Incorporated offers a range of high-quality cannabis flowers and pre-rolls, including indica, sativa, and hybrid strains. Families with special needs come together for a fun and inclusive celebration. Ultra Families Night, a celebration of inclusion and fun. The Kids Gym, a renowned center for children with special needs, is excited to host an Ultra Families Night, an event designed specifically for families with children who have intellectual delays, physical disabilities, sensory integration challenges, and other special needs. This unique evening promises to be a celebration of inclusion, fun, and community, providing a safe and welcoming space for families to connect and enjoy quality time together. What to expect at Ultra Families Night? Families can expect an evening filled with a variety of activities and entertainment tailored to meet the diverse needs of their children. Some of the exciting features of the event include a sensory-friendly environment, designed to minimize overwhelming stimuli and create a comfortable space for children with sensory integration challenges. A range of adaptive sports and games, including wheelchair-accessible equipment and modified versions of popular activities. A dedicated area for children with physical disabilities, featuring equipment and activities designed to promote physical activity and mobility. Sustainable solutions drive pest control market growth. Market overview. The Agri-Natural Enemy Pest Control Market Report offers a comprehensive analysis of the pest control market from 2020 to 2030. The report provides an in-depth examination of the market size, growth rate, and trends, as well as the impact of various factors such as control agents, applications, and regions. Key findings: the global agri-natural enemy pest control market is expected to grow at a CAGR of 5% from 2020 to the market size is projected to reach $5 billion by 2030. Up from $3 billion in the market is driven by the increasing demand for sustainable and eco-friendly pest control solutions. ############################################################################################################################################################################################################################################################################################################################################################################################### the pest control market into 4 control agents: biological, chemical, physical, and cultural. Biological control agents, such as beneficial insects and microorganisms, are expected to dominate the market, accounting for 40% of the total market share.